Okay, we have sound. Let's try this again.
Hey everybody, welcome to another Profiteer Trading video. Just take a second to read the risk disclaimer and then we'll get started on our quick analysis and run through the order ladder and trade on NASDAQ. Okay, so what you're seeing here is a video of the order ladder from our entry on NASDAQ. We're going to talk about three main things. Number one, what triggers a large leg that can be identified via technical and fundamental analysis, how to know when to stay in that trade, and lastly, how to understand whether or what the market you're in calls for as far as identifying entry and exit. So you can see here that I've gotten short on the NASDAQ at 90.71 evens with one lot, and I have my stop set to break even. So essentially the trade is risk off for now. This trade idea comes from, first and foremost, a fundamental catalyst. Okay, you guys know that I'm a fundamental trader first and foremost. So we identified simple buy the rumor, sell the news narrative. The market has been on an upside rally for 18 weeks now and pretty much has gained like 1% a day after the Fed cut rates on December 18th. Or yes, or the 10th maybe, I forget. But the point is, you can see here on my technical landscape that we've hit basically a vertical high here. We are identifying a break of that symmetrical parallel at today's price action and rollover from the initial reaction post pen to paper on US-China trade deal. So after we broke that parallel channel that you see identified through the pink arrows, we chose 90.37 as the target from the short entry of 90.71 even. We knew that the probability of this trade was above 50% and that it was closer to 67% based on the projected price movement as well. So now you've got the fundamentals, the technicals, and now you've got what usually algorithms use in order to develop an understanding of where they can fire off the contracts in areas of thick liquidity. So you can see that now that we've broken the 60 level, that there's a little bit of buy the dip going on. You can see that the market is snapping back in trying to kind of assess whether that 60 level is going to hold. And you can see that we're well away from our entry. So now we can kind of relax a little bit and start assessing why and what is going to happen based on the development that you're seeing technically and fundamentally. Around this hour, you can see kind of on the bottom right-hand corner, there's a lot of reaction going on the gold. You can see that once gold started moving and once the overall market started to kind of get a kick, it was due to the fact that we signed pen to paper on the US-China trade deal. And now that gave us room to talk a little bit more about maybe some of the negative things that were going on geopolitically since we had such a positive month, really positive end of year. So not a surprise to see NASDAQ following this technical alignment to the T. Now what we've done is we've extended it, or we've drawn out a bit of a clearer map here through those parallels. And we're just clarifying to ourselves that at an apex point, which is identified here with my circle, this is where buyers would truly regain control fairly, meaning that, you know, we've hit absolute verticals on these high flying stocks. It's only fair, technically speaking, to pull back into value area once exhaustion hits. So you can imagine if you're a buyer You've been buying, you've been adding all month, just an easy Santa Claus rally out of the Christmas holiday into the new year. You've had a fantastic return on the short-term trade. And what would signify, or what would hold significance and add validity to your take profit target besides a technical trigger of an uncharted territory? Well, fundamentally, when the rumor of having a deal with China became hard objective news, that seems like a pretty good time to look for liquidity to sell to. Because if you're a buyer, you're a seller. So if you've been a buyer this whole time, who are you going to sell those contracts to? You're going to sell them to the people who are extremely late to the game and needed to wait for a pen to paper to find conviction in buying these all-time highs. So really, it's a perfect landscape across the board, and we're just simply taking advantage of that fruitful opportunity. So you can see we are developing value at the 90-50 levels. We broke 90-60s, and now 90-50 is that key level of a psychological figure. We're basically sitting in the middle of the range of the day and of the week. So you know that there's a lot of people trying to buy the dip, and that there's a lot of people basically looking to get into a trade now, even if it's short. So this is where a lot of people get chewed up, you know, especially if you got long, like up at 57s and you're trying to, you know, catch a bid up to 60s. You know, it looks like it's going to go up and then it gets absorbed straight away back down. You can see that 58s is now acting as a serious resistance, and then bam, capitulation. We head down into the 55 key level, basically outright exposing 50 evens and saying, okay, if you're going to buy this thing, it might be the wrong time. So now you see a lot of buyers are now becoming sellers, because if you bought up high, then you need to sell low for a loss. So that's going to contribute to an acceleration and a evaluation of price. You can see that this is what's looking like short covering along with buying the dip, where, you know, retesting 55s, back to 57s, back to 58 retest. This time can barely get close. Straight away snap back down. You get a big cluster of sellers basically holding down the 57 quarters through 56 evens. And now you've got this key level of inflection sitting on the hourly candle. So if you guys are familiar with Japanese candlestick reading, you can see on this candle, this bullish candle that opened on hour 2 of the sell-off, that we wanted to try to bring it back to the top of that parallel, and we did. And it was actually a beautiful entry for a second lot. We did not add that second lot, but we certainly thought about it, and we will in future trades, knowing that this structure works. But anybody who didn't add or who didn't get in on the first rotation, this is where they wanted to do it. So now at 57 down to 55, you've got another accumulation of sellers that are basically holding a strong ceiling against all this buying. And now you can see there's a even more acceleration occurring against the original support of the 55 level. So you kind of have to think of it like psychologically. If people were trying to buy this thing, they're starting to get pretty concerned that something or some catalyst isn't going to let it hit new highs for the day, and this just could be a very corrective pullback. The candle that's closing or attempting to close is engulfing the entire bullish attempt from the prior candle. So that's a pretty good indication that we want to stay in this trade and try to extrapolate at least down to the retest of the 90-50 handle to see how we react there and how we react on taking that liquidity out. So at this point, it's my job as a day trader to assess the liquidity down at the target. So you can see that surrounding my target, there's 59 contracts sitting just below and about 71 sitting just above, which tells me that this is in range and that we do have sights set on this target from other traders and other machines. So you can see here there's a little bit more of buying the dip, trying to bring it back to 55s. So what I'm assessing here is, okay, if this candle closes above the open of the prior bullish candle, then I might need to reconsider this entry and take some profit. If we hold below 55s and close, most importantly, it's all about that close. If we close that candle below that 55 level, then we're in the money and we want to look to stay in this trade. And you can see now that buyer or sellers are completely in control. They're basically throwing bales of hay against the buyers and they can't keep up. They're trying to bring it back to 55s for like the 5th time and they cannot. And you can see now that 50s is going to become the main area that we're going to retest. So we're about halfway through the range, a little bit more actually. We're about 75% way through the range, and we're about to open up the final range of the previous Asian session where we made a strong push higher, pretty much vertical push higher. So you can see that now that we're retesting 52s, there's some more buying the dip occurring. They're basically trying to catch the knife, right? They're looking. And now what I look for is I look for the first moment of like obvious emotional capitulation where there's like a big drop where almost like if you were to, high five someone and then move your hand right at the last minute, they kind of like fall forward or they don't expect it. That's kind of what the buyers feel like here, where you've got 58 contracts sitting at the 950s and sellers are like, okay, let's hit that liquidity. And buyers are like, okay, that's going to be the bottom. And that's going to be where we're going to psychologically pop. Because, we got a US-China trade deal. We're going to hold 950s, right? Nope. We hit there. You can see here on the TPO that we've got a break now of the initial balance range low. So this will be the 3rd technical trigger now on an internals basis that says, hey, you need to stay in this trade and you need to finish the trade. Fundamentals are now playing a part actively because China and the US are starting to get some news through the wires that's sounding a lot more negative and a lot more sort of flip the rhetoric, if you will, to a more cautious sort of rhetoric, right? Where we've been going on almost 18 weeks now of everything's great. We have a deal. China wants a deal. We have a deal. It's fantastic. And then markets go up for 18 weeks. And now you're seeing finally a unwinding. Here you can see I'm showcasing the footprint, the imbalanced footprint. And what's really kind of interesting is we've got a great example of high frequency double distribution appearing here, where on the current bar, we have a large node sitting at the 50 level, meaning that there's a lot of distribution going on there where people are trying to figure out direction. But initially, the gap above and below is why we call it double distribution, because it's acting as a seesaw. So if you were to stand in the middle of that, it's like standing in the middle of the seesaw and with one foot and trying to kind of like figure out which way you want to go based on your balance. So this current development is exposing a shelf that either breaks or holds. Now, based on what we've seen throughout the entire trading session, you can see that it's very much having a hard time holding, and there it goes. It broke. And now that it broke, it's causing an enormous acceleration. A lot of buying is trying to pick this up, and it's failing miserably, and it's causing quite the capitulation. You can see that an enormous buyer just bought the 46 quarters. That's probably the product of a large unwinding of a short that had the target of between 48s and 46 3/4. We saw a clear reaction there. So as we approach the end of the leg towards my target, my goal here is to ensure that that little bit of buying that we saw there was simply a impulse wave that won't hold a trend like, but simply will be a liquidation. So anybody who got short at 47, 46 quarters right there just got, spooked from that enormous absorption that occurred. And that's classic NASDAQ, right? So now you can see that buyers have completely capitulated. There's really no one left to buy this thing with conviction. Sellers are fully in control because we've broken that 90-50 level. And what you're seeing as far as a slowdown is actually a product of sellers who are just covering and getting out of their positioning and presuming that this might be the low of the day. Based on our technical setup, we don't want to believe that it's the low yet for two reasons objectively. Number one, we haven't retraced the channel that we basically drew out on our daily chart or on our hourly chart. And we also haven't broken fully into the gap, the liquidity gap here below the initial balance range low, which is basically between 90.50 and 90.15. So I found that asking for 90.15, 90.20s was asking too much from this market, and that I was going to be satisfied with a 90.37 average projected price range. And guys, I use auto chartist. That's where I get those levels, just to kind of reiterate that the probability's there. And I haven't been posting the auto chartist as much because I haven't really gotten any requests for it. I try to post maybe 1 or 2 a week to see if anybody's actually taking a look. So if you do end up finding a need for that, please let me know, and I would not mind sharing your assets that you trade on there. So you can see that we're well above our entry, obviously, and now we're approaching 500 on the day. So what we're going to start doing is we're going to start taking note of the kind of exhaustion on the sell side and try to assess whether it's going to be time soon to just take the profit and walk away and make a day out of it, or continue based on those triggers developing in real time. And you can see that 47s are now acting as resistance. So pretty much the entire order flow analysis has repeated itself, meaning that each time that we just snap back into resistance, we show more and more strength within those resistant levels. And we're just firming up this block, essentially, where there was a lot of weakness on Monday. So great value liquidity area that needed to get filled. And now looking at the technical chart, you can see that the candle is going to close well below the open of the previous. So that is officially well above our expected probability analysis. So we can just go ahead and relax and let the trade play out and leave our stop at break even and leave our limit order where it is, with the exception that if we do break below 500 with acceleration, we're going to at least set a stop at 500 to ensure that there's no black swan anomalies that hit the news. At this point, China has been releasing information about how they're going to react to the White House rhetoric. So at around this time, the White House put out some information saying that they were going to leave the tariffs on China until the election was over. That's if, Trump gets elected again, and that they were going to essentially wait and see regarding some of the unresolved issues that have been going on kind of under wraps, because obviously the market doesn't want to spook us and they wanted to keep this rally going. But now that the pen has hit the paper, the market is reacting to this fundamental news with actual ears. It's listening. And the rhetoric from China was that China hasn't agreed to additional tariffs or eliminations as a part of the deal, but will need to issue waivers or adjustments to meet purchase commitments. If the U.S. reimposes tariffs in a dispute, China can't retaliate, but it can't retaliate with its own tariffs, but it can quit the agreement. that is pretty much the most uncanny statement that you can make on the day that pen hits paper. And of course, here we have it. There's the target. And then bam, China speaks. The sell-off begins. Everybody's panicking. Anybody who got long up high is well out of this trade by now. And all of us sellers who've been in the game for a while are basically throwing size on for the final leg. The candle has fully engulfed not just the previous candle, but even the previous highs of the day that led us to those highs, I mean. So it really doesn't get any more bearish than this. We can pretty much just set our stop to 500 here and just sit back, relax, and wait for the money to come in. You can see that we get very close to getting stopped out at 500, but right at those 44.75s, 44.50s, this enormous seller just comes in right here, you can see, and just destroys all of the buying. You can see all those little one lots trying to come in, and that just gets demolished by 24s, 20s, 28s. So accumulatively like 180 lots that basically engulf this entire attempt. So it's the final leg, it's the final acceleration, and kind of what we look for in trades. Really, this is kind of the play of the week, of the month, really. So here we go. You can tell that buyers are still trying to buy the dip, and they just keep getting destroyed. At this point, anybody who's professional is on the short side, or has a huge stop, knowing that we're going to retrace some of that value area. But buyers are desperate to get back to 90.50 in the near term. Here we go again, trying to retest 44.75, and then another deep acceleration on a China talk, or on a China blip. You kind of see distribution within that 5-tick range. And you guys, you can see how much patience this takes. You really have to trust your technicals, and you have to trust that your fundamentals are, the best that they can be. And there you go. There's the third or fourth retest of those 44.75. Now we're down retesting 40 evens. And typically when you get, that many levels broken, by the end of the leg, the acceleration becomes a lot more intense. And you can see that's happening here. Everyone's basically said, forget it, we're not buying 40s. And it's becoming an unfinished auction. And now you can see that the levels are well below where we wanted it to be. 90.37s, or I'm sorry, 90.41s is where we set our trail. So you can see we're kind of trailing the NAS by like 8 or 9 ticks to ensure that we got paid 600. Because at this point, we're only going for 680 relative. So 600 even wouldn't be a bad day whatsoever. And you can see buyers are completely out of juice. We are within our technical target, and pretty much that is the end of the trade. Let's wait and just see that we get filled. You can see my mouse is like twirling around because I'm all anxious. I'm like, let's go. And we're filled. Okay. Get out of this trade, close it all out. And that is today's video. So I hope you guys enjoyed this video. I hope that it helps you understand how we take the situational trades. And if you have any questions, feel free to DM me on Discord, or you can catch us live Monday, Wednesday, Friday in the Profiteer Zoom room. And we will see you all tomorrow for another trading session. Take it easy, everybody.